I'm Dan Kraus, founder of the Stock Investor Studio, and this is game-changing stock market news of the week. My take on this week's stock market news that matters. This is episode 101 from week commencing Monday, May 24th, 2021. Before we get started, please read the quick disclaimer at the end of this video. Right, in this episode, we're going to be talking about Peloton, tech stocks, Coinbase, Square, Facebook, Microsoft. We've got news out of Fidelity, the brokerage company. We're going to be talking about travel stocks, Ford, Amazon, GameStop, AMC, General Motors, and a few more. Right, kicking it off with Peloton. Opening a factory in the US. Now, this new facility will be in Ohio. It will create 2,000 jobs, the company claims, and could ease supply issues for its popular at-home fitness products. Okay, and Peloton is going to invest $400 million into this first US manufacturing facility, which will start to manufacture bikes and treadmills by 2023. Right, news out of Fidelity, the brokerage firm. They are now introducing fractional share trading, known as buy a slice. So with as little as $1, you can buy into your favorite companies and own a fraction of one share. Remember, Robinhood was the first to introduce fractional ownership. So an interesting development. I do think that the rest of the brokerage firms like E-Trade and Schwab and others are going to start to introduce similar type of fractional ownership in stocks. Right, news from Bernard Arnault. He is the CEO and majority shareholder of French luxury group LVMH, which of course is Louis Vuitton Moet Hennessy. This week overtook Jeff Bezos, the founder of Amazon, as the world's richest person. I did not know that. This happened on Tuesday or so. I'm not exactly sure where the standings are today. They might have changed slightly. He made his fortune and money from a collection of companies specializing in finely made leather goods, high-end fashion, and high-end spirits. Okay, so over the past several months, their sales have gone through the roof. They've come roaring back after the pandemic, particularly among Chinese and US shoppers. On tech and tech stocks, the last 3 months have been quite difficult and tough to be a tech investor. The Nasdaq at one point was down by about 10% from its highs. It's since recovered most of that and now only marginally off its record highs. Okay, I was watching TV and a RBC, which is the Royal Bank of Canada, one of their strategists told Yahoo on Monday that she believes that there's no problem or fundamental problem with the tech space and tech stocks, and I fully agree. They were just somewhat overvalued and the wrong place to be considering inflation and the overall backdrop for the overall market at this particular point in time. The backdrop for the market right now, of course, is one where growth is really accelerating and inflation is really picking up as the economy reopens and the pandemic-induced shock slows down. So she continues to think that money will flow into other sectors beside tech. Remember, there's still a lot of stimulus money that will work its way into the economy and rates are close to zero. Both of these are very positive catalysts for the stock market at this current time. Right, what stock am I seeing people talk about? It's Coinbase. I see that this week a Goldman Sachs analyst put out a buy rating on the stock this week. Coinbase also just recently hired an ex-Goldman Sachs veteran. His name is Faya Shirzad as the chief policy officer to help the cryptocurrency exchange company Coinbase navigate the whole evolving regulatory environment. He most recently served at Goldman Sachs as the global co-head of its Office of Government Affairs. I own some of the stock of Coinbase. Admittedly, I bought it much too high. I bought it way too early, but I've been adding to my position. I've been averaging in on the way down. I think it's a really good one to own for the long term. Again, this is not my advice. I'm not telling you what to do, just my view and my opinion. I think that if cryptos are going to be used much more widely and more regularly in the future and accepted by governments around the world, I think that Coinbase will be a massive beneficiary. The story is really institutional adoption and a much more secure platform that they offer, which really becomes the industry backbone. Okay, so crypto transactions will gain traction over time. They'll become much more widely acceptable, especially when governments around the globe have to start to warm to them. And I think they're going to be forced to warm to them. Now, remember that Coinbase is a great way in which to get exposure to that overall trend. Okay, you're not exactly exposed to any individual coin. Remember that each time one of their users transacts on their Coinbase platform, they make a transaction fee. Okay, so their cash flow generation is huge. They're generating so much cash, and I think as crypto start to trade more regularly and frequently, and as I said, becomes much more accepted, there'll be a lot more transactions on the main exchange, which will be through Coinbase, and they're going to be a massive beneficiary. I'm going to hold this one for many, many years to come. Right, 3 interesting stats I saw relative to cryptos. Crypto assets are close to $1 trillion. Okay, that's versus the rest of the world, including stocks, bonds, real estate, everything else, which is 700 trillion. So you've got $700 trillion for all these assets, and crypto's only at 1 trillion. I think there's so much room for growth in that overall asset class or sector that is just starting to emerge when you compare the two. By no means should they be compared, or should crypto be worth anything near the overall rest of all the different asset classes, but there's definitely, in my mind, upside. Also, China, I did not know this, but now accounts for about 65% of the world's Bitcoin mining. And also Inner Mongolia accounts for around 8% globally, a much larger share than the US. And this is according to global research out of Cambridge. Thirdly, Iranian president, his name is Hassan Rouhani. He has ordered a complete ban on crypto mining for 4 months. That was this week, he said that. And that's because the energy intensive process has caused massive blackouts across the entire nation, and there are more than 80 million people without electricity. Crazy. Right. Also, think about it. Bitcoin's recent sell-off seems to have somewhat stabilized. It's down again this morning. But remember, last weekend, the crypto, Bitcoin specifically, was around $50,000. It rallied back up to about $40,000. Now it's around $35,000, $36,000, but a little bit more stable. Let's see where the cryptos go. Moving on to Square, the fintech company. Shares were up massively beginning of the week following reports that the company will offer checking and savings accounts to small business customers. Now, this plan appears to have been found in a hidden type of code in an update that Square had on one of their apps, both for Apple and Android. And this is according to Bloomberg, so it's not entirely clear when these new products will debut. It just shows how they're expanding their whole ecosystem and they continue to innovate. Stock has been a superb performer over the past couple of years, and I think they'll continue to do really, really well. I like that one. It is quite expensive from a valuation point of view, but they're doing great things, and I just wonder if they might just grow into their valuation. Talking about travel stocks, particularly the cruise lines, they've been surging in the past couple of days. Companies like Carnival and Norwegian, they are preparing to set sail this summer, which is well ahead of schedule. Okay, so the number of Americans that are now have got their vaccines and are now vaccinated continues to go up, and people are much more willing to travel. And I personally have my vaccine. I would love to go on a cruise, maybe a Greek island cruise one day. That would be great. Anyway, also the airline stocks also popping of late. The CEOs of all the big airline companies have come out and they're really talking up their bookings and just talking about how people are just, they're selling out of seats on airplanes and booking travel. And of course, unlike last year when travel was, just massively restricted because of COVID, millions are now expected to be hitting the roads and railroads and the skies. And more than half of adults, they say now in the US, are fully vaccinated, and restrictions on masks and other pandemic rules have been eased, so it's very good for the whole travel business. I also saw that the TSA is preparing for a massive number of travelers at the airports this current weekend and for the entire summer season, and they're looking to hire 6,000 more officers to help out. Right, moving on to Ford. Keep your eye out on Ford. Their new CEO, Jim Farley, he was under scrutiny this week as investors focus on his long-term electric vehicle strategy, whose cars have been predominantly gasoline or combustion engine operated since their inception. This week held a capital markets day for both investors and analysts, and they're being pushed to follow in the footsteps of their big rival General Motors, okay? And they've revealed plans to become a lot more electric. However, Ford have made an important very first step with their electric vehicle path, and that's recently where they announced their new electric F-150 pickup truck, okay? And they've said that they will boost EV spending to more than $30 billion and aims to have about 40% of volume all electric by 2030. Right now, their electric vehicle output is sitting at 1.2% through this year. So a massive increase in electric vehicle output to 2030. And I think a lot of the other car companies will start doing that too. The F-150 truck, by the way, apparently going to price around $40,000 for the entry-level model. Side note, I've personally ordered with a very small deposit, it must be said, the Tesla Cybertruck, which I think is so awesome. I hope they start to manufacture those soon, and I would love to take delivery of mine. A lot of people don't like the look and the design. I love it. I think it's futuristic. I think Tesla creating brilliant, very attractive, good-looking cars. Right, moving on. Talk about domination. Amazon just continuing to lay down their footprint, okay? They announced this week that they are acquiring MGM Studios for $8.4 billion. They want content. Now, MGM have the James Bond and Rocky franchises. They want to compete with the likes of HBO and Netflix and Disney and the others. Remember, there's a limited number of independent studios left, so Amazon made their content move. This is their second largest acquisition ever. Their largest being, of course, was Whole Foods not too long ago. Speaking of Amazon, they've also come out this week and said that there's a new CEO. His name is Andy Jassy. He's going to be taking over on the 5th of July. Now, I love what Amazon's doing. I recently saw an article where an analyst was saying that Amazon could easily double to $6,000 per share in the next couple of years. That's almost double where the stock is trading today. I personally own Amazon. I love the stock. I love their global dominance. I love what they're doing. I buy everything on Amazon. I'm sticking with it. I'm a long-term holder. Right, moving on. Today's warning. Meme stock mania is back. AMC and GameStop both surging this week. Yesterday, AMC was up some 35% or so. It's up again today. And AMC is much, as I said, I think it's 60% or 70 or 80% overall for the week. The cult crew are just chasing these stocks. There's nothing fundamental. There's no reason to be buying these stocks. I'm just warning you, try not get caught up in the mess. It's high risk. Yes, there's high possible return, but that comes with so much risk. And my take, it's gambling. Market should be treated with respect, and your money should be treated, as a business. It's not a casino. It's like speculative gambling, versus investing. Both of these, stocks seeing increased shorts, Game and AMC both seeing increased shorts, and as such the Reddit army and day traders are going after the shorts, trying to squeeze them. I think it ends ugly for a lot of people. Not everyone's going to make money. I think very few people will make money because they're going to hold and yes, they might have a paper gain on paper, but if they don't sell, they probably won't be able to sell because it'll be too late. The stock will dip too quickly. So please be careful, or rather just stay away. Don't try and gamble your money. It's not worth it. Even if you miss out or you think you're missing out on some gains, invest your money wisely for the long term. Remember, as short interest rises, day traders, generally pounce on these stocks, which forces these short sellers, which are typically like large funds or large investors or hedge funds, it forces them to dump their short positions, okay, to avoid getting squeezed. So just be careful of that. Right, to wrap it up, a few quick snippets. What caught my eye? So Microsoft teasing the next generation of Windows is coming soon. Stock's been on an absolute tear, saying that this upgrade will be the most significant in almost a decade. Right, next up we have Facebook. After years of talking about it, Facebook officially released its likes hiding option on both Facebook and Instagram. Users of both apps are able to hide the number of likes and reactions for their posts as well as on other people's feeds as well. So that's quite interesting. Apple, a very rare downgrade happened today, this Friday, on the stock from a Wall Street analyst. Currently, their stock's trading around $125. The price target from this particular analyst is set at $90, citing really weak demand for the next iPhone cycle. Lastly, we've got General Motors trading at multi-year highs. I think it might be 3-year highs. They are currently firing up 5 or so plants that had shuttered due to the global chip shortage. Those are now going to start operating again. Anyway, happy long weekend. I hope you have a good one. Be safe, enjoy, and we'll see you next week. Take care.